Welcome, traders. We have a phenomenal session here for you. So I've been trading full time like 28 years. I don't count the 20 years before that when they didn't have internet. I was walking into the local Schwab office, putting trades in the lobby over my lunch period. But what I think the most amazing part of what we do here, trading, is if you have an objective, systematic approach to trading, you don't just wake up, turn on the computer, and start putting orders in. So when you ask people why did you enter Apple? Why did you do this or this? Their answer should give you their approach. Our approach is totally technical based. This is a little checklist, and we always start our webinars with this slide here because these are the concepts that make up our approach for the reasons that we are trading. And what's amazing, what you're going to love about today's session is I can take my laptop, travel anywhere in the world, and I just need a fast internet connection. And I have an approach. I know what to do to get ready, to look for opportunity, to execute the trade, to manage in between, to find opportunity anywhere in the world. That is an amazing skill. So what I'm going to share with you today and in the allotted time is, okay, Dan, what do I do to prepare to trade the opening session? So that's what today's title is, how to trade the open like a pro. Open starts at 9:30 Eastern time. NYSE opens up. I don't turn on my computer at 9:28. I'm not prepared. That's what we're going to go through today. So sit back and enjoy. Feel free to ask questions. But this is our technical approach. We are price-based traders. No setup, no action. On the time frame that you are trading, I'll show you pictures of patterns that are bullish or bearish, but that is my starting point. Then I take that picture and I say, okay, well, where is this picture in connection with the trend, support and resistance, multiple time frame analysis? Is it showing relative strength or weakness to the sector and the broader market? What are the broader markets doing? Are the market internals for day trading or swing trading at extremes to give you pause, looking for a short-term reversal? And then everything's about position and money management, trader psychology. Would any of you open a business without a trading plan? What's your income? What's the demand? What's going to be your money management and training and customer base? Well, you should have a trading plan in business also, in money management. It amazes me that people will spend hours researching the purchase of a cell phone or an Apple Watch or whatever the case. But then they just come to the market and they'll throw $50,000 onto a trade, and I'm like, well, why'd you do that? Well, I don't know. I heard it on a message board that AI stocks are rocking, so I'm just going to get on board. These are just 9 pictures of all bullish. These are all bullish trade setups on any time frame. This W bottom on a 5-minute chart has the same message of a double bottom if you're trading a weekly pattern. Master trader buy setup, very simple. A retracement and reversal on support in an uptrend. Breakdown failure, some of my favorites. Igniting professional gaps. There was one on Bristol Myers this morning that is like this, gapping over a red bar and a beautiful breakout. 1, 2, 3 continuations. An igniting bar from consolidation, not far from the 20. Inside 1 or more inside bars, amazing setup. what routine are you going to use? I say for day and swing trading, even though the charts I'm going to go over, you'll see many. I'll be talking about. Look, if you're just trading the open, then you just exit here, or you're using the open to get onto swing trades. You put your stop in, and then you go to work, you go to the golf course, you go whatever you're doing. But I'm going to be focused on what do I do to make money in the first hour. I wake up, I'm reviewing the futures, the broader markets, and the sectors to develop a trading bias. Actually, I do this the night before. So really my routine for trading the open starts at the end of the market. I already have a bias at the end of the prior day, and then I'm looking at the gap in the futures to see if anything has changed the bias that I developed the prior night. If you have open positions, the next thing I do, I have a market minder of all my opens. I want to see if there's any, I purposely use the word inventory. And why do I do that? Well, imagine, because that's what we are. We are buying and selling inventory with the intent to make a profit on the difference of those two numbers, the liquidation price less your cost basis. That's what we're doing. We're just using stocks and ETFs and futures and commodities and crypto, whatever underlying asset class you like. That's totally fine. Similar to if you were the manager of the men's department at Macy's, your inventory is the merchandise that you're selling in your department. You don't, if some ugly ties are not selling, do you just hold on to them because you don't want to take a loss, like many people do in their stocks? Or do you say, these ties are not selling, so I'm going to put them on sale and get them out unemotionally, because that's the right business decision. And that's what a stop loss is or we have what's called 3-bar rule. If something's not moving and it's dead money, and just move on. Develop a watch list based on, since I start the night before, I already have a watch list that I have alarms on. So I'm updating this. I'm scanning gapping, earnings, new stocks for new opportunities. I have, you can go to whatever news sources or software. We at Master Trader use TC2000 for scanning. I'll show you a screenshot of it in a few moments here. And I can start looking for new setups in the morning by scanning. I can do a manual scan. If I know a particular sector is bullish or bearish, then I just pull up that sector and do a top-down analysis looking for my favorite trade setups. So the market's not even open yet, right? So I'm setting alarms on my stocks of interest. I have 6 monitors here that I trade off of, 27-inch. So I have a lot of real estate. And so I have a bunch of 5-minute little charts, or thumbnails, people call them. And that way, what I call a tier 1 trade is, as long as you act properly at the open and you hit my entry point, you are good to go. Calculate your position size, and whether it's a day trade or swing trade, that's totally up to you. But those I want to put in a 5-minute chart because they're like in the batter's box. They're ready to go. And then I kind of say tier 2, I'll set an alarm, I'll come back and look at them within the first 30 minutes. And then tier 3, I could watch some of those for, many days because they just have to set up longer. Be aware of any economic reports or other market moving events in the first hour. I have bookmarked a site for economic reports, and I don't get blindsided by numbers, whether it's like a sector related like oil, or the main ones come out at some at 9:45, but I'd say the 10 and 10:30 are just be aware of those. These are two of our advisory letters. So this is what I'm also looking at as part of my pre-market preparation. This is our weekly options trader. We just sell options and credit spreads around turning points that expire 10 days or less. And then our swing trade, we trade stocks and options. And I have them in a minder, as I said. And all I'm doing when I fire up my computer, I'm looking at alarms that went off. And then I'm looking for unusually green or red numbers. So that's why I write here. Do I have a gift where the stock's gapping in my direction, where I want to sell or close, cover some pre-market? Do I have any problems? There's something against me that I might even partially hedge pre-market, or at least put it in a thumbnail that says, hey, pay attention to me pre-market. So that's an older chart, but it's the concept of relative strength and on its own page. So here are the cues on the right. Obviously gapped up here. This is pre-market. So I'm looking at my pre-market charts, and this is one of the first things I do in the morning, as I said. Turn on the computer, where are the futures trading? I really don't care about the raw number. I need to see a picture. So this had a bullish gap, and then it started pulling in towards the market open at 9:30 Eastern time, but it's still bullish. Look at AMD here. Same pre-market time frame. This gapped up from, this is what we call an end of day base. So that is strength. Gapped up, kept going. Controlled pullback. As the cues were selling off into the market open, AMD's breaking out. If it's in your trading plan to trade pre-market, then that's fine. That's totally your decision. I do it if it's a compelling pattern, and I go through my trading checklist, and if I have a liquid pattern pre-market, so this would be a pattern I would trade even if the market were open or not. So we bought this pre-market because I had a bullish bias for the day. Okay, now the market's open. So we've been talking about getting ready for the market open. Within the first, so I would say I do this within the first 30 minutes. This is today's subject, right? Trading the open. This is what I'm doing. Within the first 30 minutes, I'm constantly updating my market bias by reviewing, I call them the four horsemen. I told you I have 6 screens. So one of my screens on the bottom right, I have the four horsemen, the Qs, the spiders, the diamonds, and IWM. And I'm looking at 3 different time frames, 5 minutes, 15, and 65, which is, like hourly, but just 6 bars per day instead of 7. And then I'm looking at the dollar, the bonds, the tick, other market internals, the volatility index. And so I have a constant pulse on 3 time frames of updating my bias in the morning. Our merchandise, our inventories, our merchandise. We already talked about that. So I'm reviewing and managing my open positions. Like, I use this analogy, like, why do I want to go look for new opportunity if you know, my house is on fire. So my open positions get my first attention. Then what's next is my tier 1 trades that were in a 5-minute thumbnail. I want to see if they're ready to enter. And you'll see here in these charts that we do a lot of gap trading and swing trading at the market open in the first hour. And you can either day trade them and close them before you go to the golf course, or as I said, just put your stop in, maybe sell a third or a half, and go to the golf course then. So I'm considering entries on all my tier 1 setups, showing relative strength. They have compelling intraday, time with the futures. Once I'm comfortable now, everything's under cruise control with my opens and the tier 1 trades, and I'm ready to look for new trades. Well, I have some of my favorites here in TC 2000. I go look for new trades. I'm looking for gap trades, gap up on volume. I have one gapping over a big ugly red bar. And you know, all the scans, I have the opposites also. I have 180 reversals. Well, here's the one gapping over a green bar, gapping over a red bar here. And it's a great way to find new trades. 2 of my 6 screens are dedicated to 15-minute sectors. So this is an example. I monitor 26 sectors on these 2 screens. And just by looking at this, I can visually see what sector interests me for day trading. For swing trading, all I do is hit a button and all these convert to a daily chart. So, but during the day, I'm looking at 15-minute charts. And that directs me to an interest. We do a lot of gap trading, as I mentioned. My partner, Greg Capron, who I've been working with for over 25 years, he's a pioneer in technical analysis, the best technician I've met in my life. And this is his advanced gap strategies course. I just pulled this out of it to show you one example, but he splits it down into a 7-point system. Now, just like with anything that you're learning, we in a educational format, we go through it slowly because that's what teaching is all about. Once you understand and internalize the information that we teach, I'll go through these real quick, but you internalize all 7 of these steps as fast as my eye can look. So on my laptop, which I run my trading room on, which is the screen that our subscribers see, obviously, I have a daily, weekly, 15-minute chart and a small little monthly. But I can tell just with my daily and my intraday chart, and I use 5-minute charts for gap trading, I can instantly tell you if it's a high quality gapper. So let's go through these now. Number 1, let's just focus on the bullish side. Is it gapping above resistance? Yes. Is it gapping above some type of bearishness, like a red bar, topping tails, because that's going to create a little shock element? Yes, it's gapping over all, you know, all these red bars, because this could have retraced, but now the bears are caught. Is it gapping above a base? Yes. Does the gap have a void above or above? I had to mention this word earlier, but a void, every one of our setups, remember the slide where I showed you 9 bullish setups? Every trade we take, you don't just say, well, that's a 1, 2, 3, Dan, that's a buy setup, that's a W bottom. Yes, but then we have quality of patterns. So every single pattern that we teach has to have a void. What that means is, for going long, is you look to the left. Is there any significant resistance or congestion to prevent this setup from moving higher? That's how we define a void. And, I need more data here to look to the left, but, this has a beautiful void. Does the gap have relative strength? Well, relative strength, it came in a very controlled manner. This is a buy setup with this green line. There's no reason for you to know it, but that's why I'm going to tell you. This is minor support from the consolidation. So if you see this red line here, notice how that is minor support. So here's the green line. So right here it's 70 bucks, 70 bucks. So this controlled buy setup and reversal on minor support is the total no-brainer entry for this particular one. Is the gap size ideal, okay, or too much? What we mean there is, I love gaps that just gap an adequate amount over resistance. If this hypothetically gapped to $84, gap's too big. Just use common sense. You're not going to buy something gapping from $69 to $84. The risk to reward is all out of whack. And did the gap come from an end of day base? That's what this other one I was showing. Well, hold on. End of day base. I commented on it on a different slide. So we'll just go through as many examples here as we can, and you'll see I write up here a day or swing trade, because we're focused on trading the open in this session right now. This is actually a closed trade. We have 3 different advisory letters. This advisory letter, we trade stocks and options. We buy options for directional trades when they're liquid because of the benefit of leverage and limited risk. And we sell options. Actually, today's, we do what's called Master Trader Live every Wednesday on YouTube. So you can go there. It's every Wednesday at noon, and it's a free hour of education. Today's session, we did it on selling credit spreads. So this would have been a good one to not only sell an out-of-the-money call spread, but in this case, we bought puts. We bought in the money puts as a directional trade. What's the setup? Simple. It's a sell setup, 3-bar reversal, resistance, declining 20. And look, this is my price void. When you have a momentum move, see, I don't have overlapping bars. That's going to fall in a more fluid manner than as if this had gaps, tails, overlapping bars, etc. So trading the open, I got my setup. I'm sure I found this the night before, so I'm using the open to enter my day or swing trade. Whether you buy puts, if you're an option trader like me, if they're liquid, of course, you're always going to emphasize that, or if you are going to short the stock. Our entry, this is a bear 1, 2, 3 continuation. So the entry for swing trading is under this bar, stop over the high, manage in between. For day trading this as a short, obviously, as I showed you in the other examples, I need to see an intraday time frame for my entry and stop are going to be different most of the times. Well, the stop's definitely going to be different because it's going to be tighter. But as a day trader swing, the entry may or may not be different. Here's a 15-minute chart of whatever issue. And I'm just showing you, this is one of our nice patterns, a 1, 2, 3. It's a wide range bar. Remember I defined it earlier. It's a wide range bar with little or no tails from consolidation and not far from the 20. So this is a perfect chart for day trading the hour. And then you have one or more inside bars. The entry is over the high of that setup. Stop under the low, manage in between. So this one actually did not trigger, right? The entry's over the high. This one did trigger. So it had a nice gap, minor support. This wide range bar went through the prior bar's high. Notice the concept of price void. There's nothing to the left. You buy over that bar's high, stop under the low, and whenever you go to the golf course, whether it's 10:30 or 11 o'clock, we say 11 o'clock is a good. The busy part is, well, really 9 a.m., but 9:30 to 11 is a great morning trading section. 11, I'll show you reversal times in a second here, but then 11 to 2:15 it's the midday doldrums. So here's another one the very next day, also gapped up, started with a nice thrust there, 1, 2, 3, and look, whether you sell it because you want to go to the golf course and you want to be flat, or if you let your trading software take you out, or if you entered this intending as a swing trade, it's fine. You put your stop in and you're gone, and then you manage it later. Okay, yeah, you're saying about the voice. Yeah, I got a beautiful Yeti here. I haven't heard of anyone else mentioning it. Another example, day or swing trade. Closing breakdown. Look, all of our charts are this clean and simple. Unfortunately, people try to throw all kinds of hocus pocus on you with oscillators, Nikachumi clouds, I can't even pronounce it. All the data is right here. Color-coded candlesticks. We use the 20, 50, and 200 just to speed up the analysis. Color-coded volume. Look, greater than what's in a downtrend. 20 below 50. 100% retracement. This square. Bearish consolidation. Attempt to break out, failed. 2 red bars. Closing breakdown. Inside bar. This is a no-brainer. Bear 1, 2, 3 short. You can buy puts if they're liquid, short the stock, look to the left, no support. This is a no friggin' brainer setup. So you enter here. I mean, you could have shorted the breakdown, but here's a 1, 2, 3. You could have day trade or swing trade right there. Again, the management is going to differ based on if you're day or swing trading. So here we go again, 15-minute drill down. Here's my daily. So here's bearish gap, under consolidation. Here's my downtrend. I call it, just think of your smaller time frames as a microscope. It's a microscope of the bigger time frame. So here's my gap down. Here's my gap down. Wide range bar. I got another bear, 1, 2, 3. Now it's climactic. I'm going to go ahead and cover a third or a half, depending on how you want to manage, or if you're leaving for the day, take it all. Bearish consolidation, collapsed again. If you were swing trading, because that's a nasty fall there. So here's another scanning, another page, like I showed you those little snippets before. And you can do your top down. Greg created this, and we actually give this away to subscribers. Whatever you subscribe, whatever product to us at Master Trader. If you have TC2000, we don't own it, but we love the platform. It is incredibly powerful. So we give you these scans and come into our green room, and Greg will give you a tutorial and teach you how to work it. But Greg's a master at that, and he can find opportunity, I tell you, in 10 to 30 seconds. That man, I've seen him give me 3 trades as we were going down an elevator one time in Orlando. It's amazing. So these are what reversal times that we've discovered over the years, just because of the way money flows. The market's open, they get filled, they retrace, they go to lunch, now the afternoon session. So today we're just focused on the first hour, right? But I gave you the whole thing there if you want to grab a snippet there, because I've done these before on afternoon trading. You know, you just want to trade the last hour of the day. We can teach you how to do that too. So the doldrums really 11:15 to 2:30, and then we're, you know, doing other things if you're in the market all day long. But around 10 a.m. and 10:30 are historically very good reversal times. So if you're day trading, just be alert around those times if the market has already run a lot. 15-minute spiders, just, you know, the markets have a natural ebb and flow. So here are the different days. So it gapped up, and this one actually the turn happened a little later than the other reversal periods, but you can see how you use this 15-minute chart of the index ETFs to constantly monitor your bias, your trading bias of the day. So when I say we have all these tier 1 trades, and I say, you know, time them with the market, I just want to make sure that the bull or bearishness of the indexes are generally in my favor at the time that I am entering the stock of interest. So you don't have to be trading the spiders itself. You can, but so let's say I'm getting ready to put on a long. Here's my W bottom, and it starts to break out. I'm totally fine now of putting on my individual bullish positions. That's another gap example. You know, nice gap. See how it's not too big? It's like perfect. It's gapping over all this. Here's my 15-minute chart. Here's my end of day base that I mentioned earlier. A base means it rested. Look, this rested for an hour and a half into the close. And so it's gapping from a base. I have a bottoming tail. You could buy that 15-minute high, or if you had a 2 or 5-minute chart, this tail would have been a buy setup on that pullback, like I showed you in that first gap example. Consolidation over time. Again, day or swing trade. This could have been a day trade, particularly if you bought the buy setup near the low, because look, that would have been on minor support, just like that other example. For swing trading, these are ads, because the daily is an igniting bar, igniting gap breakout. So you can add to your swing. You've heard me mention the green trading room, our live trading room, and you know, sometimes people, rightfully so, they're like, you know, Dan, you know, it's wonderful you're showing me all these PowerPoint slides. And I say, you're right. When we do MT Live, we reserve 15 minutes to look at real charts to apply what we learned in that particular lesson for the day. But spend $7, come see Greg and me in our live trading room, and that's where we walk the talk. You will watch us trade gaps. Everything I'm covering here today is what we do in the green room every single day, because this is what we're doing. We're trading the open for day trading and swing trading also. Just another beautiful gap from this little bear flag. Look at these converging moving averages. Momentum move. So I got a huge price void. These dotted lines are pre-market. So it gapped down from an end of day base, couldn't bounce. And wow, do I wish all gap trades were this easy. But look at that. That's a picture of steady, just institutional liquidation. Look at this. That's the biggest ugly red bar on this whole chart. Another gap breakdown here, you know, and I got a price void here. End of day base, breakout failure. Why do I have a picture of this wounded dog or wolf, whatever animal that is? Because when we look at gap trading, so you have a bearish gap down. Now I sit back and I want to see how far can this wounded animal run. And based on this closing bar with a topping tail, the answer is he's wounded. He can't bounce. Look at my daily chart, bearish. Notice no topping tail. It can't bounce. So this is a perfect example to day trade short or swing trade short, putting on your trade in the first hour. And you, as I keep saying, you just have a different stop. If you were shorting this as a swing trade, your stop is over the prior bar's high. If you are shorting this as a day trade, your initial stop is over this end of day base until it gets altitude. I define altitude as the trade is working as intended. Once it starts its fluid move down, I'm moving the stop to the day's high. Once, and I love moving stop as soon as reasonably practical for to break even. Here, multiple bar decline, bottoming tail, I would have been out of half. And we have clear rules on objective trade management. As long as it's not at your target or accelerating, then you only cover half after a multiple bar drop. Let it retrace and pivot, which are what these dots are. Nothing proprietary. They're just pivots. You have the software spit it out, and you trail the back half over a pivot.
Hey Dan, you got about 2.5 minutes to go.
Yep, I'm watching it. Perfect. Yep. So here's a 1, 2, 3, 4. Beautiful for day or swing. This is Greg's advanced gap strategy course. You can check that out for you morning gap traders. We love selling credit spreads. This is what I said our MT Live today was. We sell puts under support. That would be naked. If you want to buy further out of the money one, that's a put spread. We do them in the morning. We do 0 DTEs. So the spiders here gapped up right here, pulled back. We sell a put spread. Manage in between. And this is our results from last month. Of course, we have losses, but $5,600 just by selling premium around turning spots. So we only do this once a year. We put all of our courses, and not all of them. We have these ultimate bundles that we created this time. This is an options bundle. MTS is Master Trader Strategies. Greg does all of those technical courses. I do the option ones. We have a technical approach to trading options. So here are the options one here. Here's his gap trading is on sale. His swing trading, position and money management, our live trading room, and the advisory letter that I showed you a bunch of examples for. Go to mastertrader.com/holidays, check it out. Email me, Dan@mastertrader, with any questions. and wish everyone a great rest of this webinar and happy holidays.